Okay, good afternoon, everyone. This is Demetrius with Akeelah Traders and Akeelah Trading Academy. And so today is June 18th. It is almost 2 p.m. Eastern Time. And so I'm going to do a brief video today because this is going to be a follow-up on a video we posted. I think that was on Monday. So today is Thursday. So we're going to take a look at SpaceX and just follow up on the structure that we were talking about a couple of days ago. And so in that last video, we were watching SpaceX up here. I'm going to go down to the 15-minute time frame. And our overall focus in the things we're going to look at today is just looking at how we approach the markets, identifying key zones, key sources, high probability zone areas. And so one of the things that we had marked in the previous video on SpaceX was that at that time, it had pushed up to here. Its all-time high was right at 225. And the concern at that time was that there was this 15-minute demand zone. And so the way we identify demand zones is a little bit different than most people would just naturally classify a demand zone. But this was our first target area. Was at the time the market was around 215, 216 or so. So there was an imbalance here that needed to be satisfied here at this 15-minute demand zone. However, we also pointed out that this was an H1 fair value gap that needed to be satisfied as well. So that's one of the key things we want to look at when we're following our overall market structure. And so those are two magnet areas that were designed, pretty much going to pull this down. Our H1 demand zone, and so this was the 15-minute demand zone. And let's see, that price range was around 196 to 202. So we knew it had to at least come there. If we had come to this 15-minute demand zone, found proper support, and kept pushing up, then SpaceX could have continued. But this demand zone, once we failed this, and that brought into place this H1 fair value gap, and ultimately the H1 demand zone, I'm going to go to the 1 hour time frame to take a look at that. And of course, this is all relatively new because SpaceX just launched last week, so it hasn't quite been a week. But this H1 demand zone is what was critical here. I think I used an example in the last posting, was that this H1 demand zone is a high probability area because this is where the market makers have already told us that there's a high value or at least a high demand to buy this asset. So this was going to be a magnet if this 15-minute area did not hold. The other thing I want to point out on this is that I'm going to pull up another chart here, is because the way the U.S. market operates, we trade in markets that trade around the clock. So 24 hours a day, 7 days a week. In some cases, there are restrictions on the weekend, but at least we like to monitor assets that move around the clock. So what most retail traders are just not aware of is that these markets are moving even once the U.S. market closes. So when you see things like this, gaps, significant gaps, this is going to be the time. Let me move this out of the way. This is going to be the time between, the market closing on, one day and opening the next day, or closing on a Friday and opening up on a Monday. But, in these continuous markets, we're able to get a much better read. And so this H1 demand zone here, if I was just following the traditional trading view, New York market hours, this would have looked like this 15-minute zone was also an hourly demand zone. However, I'm going to go over to lighter. It's one of these that I like to use. And so I'm going to go to lighter and pull up let me get this out of the way. And pull up the same chart here and show that there's more continuation here. So I'm going to go to the hourly chart. And here on the hourly, we can see based on what we define as a demand zone. So this is the peak. This is the high, the same 225 to 220, like it got almost a 228 here. Once this extension was made here, when I look back, the demand zone that we would qualify, that we would classify, from the way Akeelah looks at it, is down here. And so the true demand zone was the one that was down here, this 170 looks like 168 to maybe 172 or so. This is where the real H1 demand zone was. So it can be a little misleading if you're only following, your traditional trading view charts that only, capture candles during the live, say, New York market time. But nonetheless, this is what I want to point out. So the market did come down to this 172 area, and now we're pushing back up. And so the test is going to be, is SpaceX satisfied? Is this H1 demand zone sufficient enough? In my opinion, it is, because the next lower support below this, when it launched, was the original 149, maybe 150. So this demand zone here is the structural, I would say, bottom, for lack of a better word, on SpaceX for now. But the thing to consider with this is, as I just mentioned, the launch, the IPO was at 135. And so the public launch was at 150. So this demand zone here, in my opinion, is a make or break. So we have to hold this area here. If you're looking for a good entry, if you didn't get the IPO price, then this would have been my target entry here, somewhere in this 165 to 170 or so range. But we need to see this area hold in here. So now we've got a slight push up. This is almost 2 p.m. New York time. And so, the market will tell as the next several hours play out. But this range here is a must hold here for SpaceX. Okay. So if we lose this area, I'm going to say, once we lose this loss in hourly demand zone, there is no bottom for this. Pretty much the bottom is going to be this 135 IPO price for this. And so if we lose this, it'll be a clear exit sign for me to just completely get out of this and, wait until we get another rebalance down in this area. We did take shorts on this from when we posted this a couple of days ago. We shorted from around the 215, 216 area down to this 170 or so. I'm going to see, I think I have one of the communications in our Trading Academy. I'm going to have to find that. Yeah, okay. So yeah, this is a look inside our Trading Academy as to where we first started discussing this setup here. And I'm just going to make a point into this area. Yeah, let's see. Let's look at this one. So this was that look originally. So yeah, the price was around 216, 215 or so when we shorted this. And the comments there was just, here in our Trading Academy group, I'm commenting, hey guys, let's see if even the mighty SpaceX, follows true market structure, the way that we've learned and the way that we trade the markets. It did start pumping and is left behind a pretty strong demand zones, but you can see at this time, the first target was this 15-minute demand zone and ultimately this H1 demand zone here. So the H1 demand zone was down at 172. The 15-minute was around the 194. So we signaled, hey guys, we're shorting this to take it back down to this area. And there were several others that got into this trade, I think. And so these are some of these, results as this thing started moving. You can see here the entry price for the short was 216. At that time it was at 213. But we rode this down pretty good, all the way down to 208, 201. We gave another update. Hey guys, this is just beautiful. I guess SpaceX does respect market structure. And so the way we approach this, it doesn't matter the asset. This is a way to read high probability zones and identify key areas. So it did come down to this 15-minute zone. Let's keep riding it to, I think we did take it all the way down to 196 at that point. And at that point, it was that was my initial TP target. And, from that point, we just said, hey, we just need to wait to see if it's going to carry on down to that area. So that's pretty much what I want to look at for SpaceX there. But the rationale that we're trying to drive is learn to read where and how these markets are going to move. And when you see these kind of structural breaks, it's a high probability, not guaranteed, but a high probability opportunity that the market's going to move to these targeted zones. Let's go take a look at something else here. Let me go I think we looked at Broadcom the last time as well. So I'm going to go back and look at Broadcom. And I'm going to go up a little bit higher, go to the 4 hour. So this is the structure that we discussed the last time. You can see once Broadcom did come down here and establish this area, 357 to 362 was the target for it to come. It came right to 365. So it's pretty much satisfied in this area. My next look up here, this is a H4 break of structure supply source. So this is what originally should have held, if Broadcom was not going to fall to this area. But now once we've done this, we've got another structural break back up. So the key thing to watch for Broadcom right now is this area between 400 and 407, 408. So we need to see on the H4 a close back up above this previously broken supply source. If we get that, Broadcom is likely going to take off again and push back up to retest these new highs. The target area for that is going to be what I would identify as the break of structure source area up here. It's going to be somewhere in this range here. Let me put that as yellow. So the next target for that is going to be for it to come back to 480 to 500. So we're already in longs here. I got into longs on Broadcom around, let's see, 360, 370, 380, somewhere in that range. Once we showed that, this was looking like a pretty solid bottom, at least for now. So I have below identified here, this was a fear collapse area to get out. If we fail to hold this area up here, then the market was, there's something broader going on in the overall financial markets or the overall AI market, and that's a signal to get out. But hopefully you were able to take advantage of getting it here. I think if you got back into Broadcom anywhere in this 365 to 380 range, then you're going to do pretty good. But I would be looking to take profits once we get up to this 480 area, because we've already had a substantial pullback from here on the higher time frames. That's a larger structural break, and so we typically see markets push back up to this area for a retest and then reject down even further. So we're going to be taking profits once we get up to this area. If we push back up and close above this, make a new all-time high, then hey, it's off to the races to the potential 580, 600, 650 range for Broadcom. Let's take a look at one more for today, and that's going to be gold, one of my favorite assets to trade. And here in gold, we've been in some shorts for quite a while on gold. And this structure here has really been playing out on the higher time frame. I'm going to go back here to see where we have been targeting. So I'm going to mark this up from, I don't have a lot of other markings on this chart, so I chose this one to look at and to show why we're targeting for gold to come back down to this area. So this was gold's all-time high that we reached back around the first of the year. Let's see, the end of January. So right at $5,600 it got. So I'm looking at the daily chart right now. At that time, the daily demand zone, what we would call the daily demand zone, was down here. And that was one of the main reasons as to why gold made this initial big tank down. There's some, trades that we were following in some of our trading channels when gold was back here and it was pumping to 4,700, 4,800, 5,000, 5,200, 55. This daily demand zone was down here screaming, saying, hey, I cannot sustain this. There's no way, this is the Jenga example again. There's no way I can sustain this. You have to come back to balance down to this daily demand zone. And that's what happened with the big market crash in the first part of February. From a technical standpoint, it had nothing to do with tariffs and war and all that kind of stuff. This was gold being so far overextended, so much overly extended that it had to pull back. So now that happened, and this demand zone here, notice how we came down and it pushed here, but it rejected and did not close below this demand zone. So for us, that's still not a break of structure. Gold is still bullish until this point. but we did get this pullback. And once it came and closed below here, this is the signal for us here. This would have been my signal that gold is ready, now finally ready to continue falling further. And where is that fall going to be? Would go to our source area, and this is our daily. I have an H4 on here, but on the daily chart it would be the same thing. So this is our daily source area. So once we see a structural break from here, the market almost has to fall. And I say almost because nothing's guaranteed, of course, but this is our structural target for this. So if you're swing trading this, which we are, you should have been in a sell on gold back here once it came and tried to retest this area. Let me see, where did we get in this sell? This sell entry was back at 45.27, 45.30 or so. And notice how the TP target is to come back down here to this area. This is the source. This is the source for, again, it's labeled on here H4, but it's the same as the daily. So H4 and daily is saying gold, you need to come back to this 38.85 to 39.70 is the target range. It came pretty close to right at 4,000, but we're looking for gold to still push down. So this is still a valid trade, and you know, we'll continue to monitor this, and you know, to see where ultimately gold ends up. But this is going to be the trigger buy for us. Once gold gets into this area, 38.80 to 39.70 or so, a collapse below this is going to be catastrophic for gold, because again, this is a daily area. So if we lose this area here, the only thing to catch this is going to be the next daily source target, which I'm going to go ahead and draw that on here. That's going to be down in this range. That's down here. So that's going to bring gold down to 3,300, between 33 to 33.70 or so. So we must hold this area up here. And so far, you know, gold structurally looks like it's going to hold that. But we're always we're trying to read the markets, not predict and project the markets, but we're trying to read what the market is telling us. So as of right now, gold is still following in my projection to this area. And if it holds, great, we can bounce back up and push to new highs. Otherwise, if you're holding gold, you're going to want to get out until we rebalance down this 3,300, just say 33 to 3,400 area. Okay. All right. So that's all for today. If you guys like this video, hopefully something in here was beneficial to you. Please like and subscribe to the channel. Leave us any comments that you have, and we'll look to you know, do some other analyses, maybe touch base on a few other assets. If there's something particular you want us to take a look at, drop that in the comment section as well, and we'll see you guys next time.